What's up, everybody? Hope everyone is having an amazing day, and thank you all for joining me here. Um, Today's video, I want to talk about identifying, basic market structure, how the market moves in a basic way, right? Your basic way of finding a trend or detecting um, which possible direction the market could go in, right? So there's only three there's only three directions that the market can go in, okay? So that's either we are in an uptrend, or we have a sort of like a consolidated phase in between, like this, right? So consolidation, and then downtrend. Okay, those are the three ways that the market will move. Okay, and in the process of detecting a uptrend, you see right here there is a high that gets created, a little retracement, and then a low, right? So the market can, you know, make a retracement up and then back down, right? So it could go lower, but in this instance right here, see we have a high and then a low, and then the market trades higher, creating a new high, right? So this is a higher high. Now, the market, you know, could just keep flying up like this, right? But instead, we have to do some type of retracement, you know, to to match higher time frame trends, right? So say on the higher time frame, right, we have a uptrend, but then there's a structure right here that got broken. So the market usually tends to after retest after points of liquidity that were broken. So this high right here got broken on the higher time frames, right? So let me make this bigger, right? So this high got broken right here on higher time frames. And then, you know, what you'll see essentially is a retracement and then a trade back to the upside. But in this area right here, from this high to this low, you'll see on the smaller time frames, during a retracement and an uptrend, you'll start seeing this, lower lows and lower highs. And the market will create a downtrend, you know, and on the lower time frames when the market is in a higher time frame uptrend, if that makes sense, right? So, um, and then after the retracement, a lot of people will get confused because they don't look at higher time frames first off. So after the retracement from the lower time frame downtrend, they want to start that higher time frame uptrend again. So then we create that, that higher high, that new high from the previous one, right? The new high got broken. So then we have some idea that the market could potentially be more bullish. Okay? And same with a downtrend, as we explained, right? So say there was a low that got broken like this, and this scenario right here is a higher time frame, right? So this low got broken, and the market has to retrace back, right? So from this point here to this point right here. On a lower time frame, a uptrend got created in this area. But in the bigger scheme of things, we are in a major downtrend, right? The market had broken this previous low and retraced back up into the area, and then trades back to the downside, right? Continuing that lower low and lower high and lower low, and that cycle, right? This is the basic cycle of market structure, right? So we'll look at it in this scheme right here of how overall structure is kind of played out, right? So you see, price could be trading down here and break these highs, right? So when higher highs are getting broken, there is a high possibility that the market can continue going upwards in an uptrend. And you see right here, when we reached this peak, right, the market traded down, and it could have continued upwards, right? But it didn't. Okay, so for some reason the market only stopped below this previous high, right? And resulting in a lower high. So since a lower high got created, we might and didn't trade above this high. You sit patiently and wait and see if a low would get created, right? So we traded past this low. I'm getting a little mixed up in here, right? So traded past this low. So now you can confirm right now that you could start to see a downtrend happen, right? And longer term. But what I was trying to explain earlier is, say you have this weekly, or not even weekly or so, just a higher time frame trend, and you get structure right here. This high got broken right here, so this high right here got broken, and on the higher time frame scheme of things, we look like we're in an uptrend, okay? But in this area right here, from this high to this low, there's that retracement for the higher time frames, right? So in that area, right, after you get that peak of the high, right, we need to make a retracement, right? And this is why some traders might get confused without looking at higher time frames, because they don't realize that new highs are actually being created on higher time frames, and instead they look about halfway through on the 4 hour or the 1 hour time frame, and realize that they think this is going down, when in reality it's in a retracement phase on the higher time frames to go continue its uptrend, right? So don't get caught trying to counter trade when the market is don't get caught trying to sell on a higher time frame retracement, right? So the retracement, you would be able to see it easier on the lower time frame, but in a whole grand scheme of market structure and overall price, it's bullish, right? And then vice versa, you can say, you know, the same thing goes for um, downtrends as well, right? So this area, you know, from this low to this high, and then this low to this high, right? That previous low right here got broken, okay? So if I had a box or of some sort, or a line, or whatever for a entry point, you know, you see in this area right here, the market on a lower time frame would have to retrace, right, like this. And this is where it confuses smaller time frame users, because right here they see this low, and then they start seeing, you know, on a smaller time frame, they start seeing higher high, higher low, higher high, higher low. And by the time, you know, these higher highs and higher lows are done being created, it's about that time to continue on with the actual real uh, trend. Okay, so don't get caught, you know, trade, like um, counter trend trading, right? So yeah, that's you know, you can clearly see right here that that is how you identify, you know, basic market structure, basic finding, you know, basic trend, and you know, overall structure, right? And then understanding that, you know, there's structure inside of structure, right? So, you know, there's trends inside of trends, you know what I mean? Like there's downtrends inside of uptrends, and what I mean by that is this type of stuff right here. Like, so we'll do another quick recap, or maybe something will click here. So this is the big um, trend, right? This is how the trend is, let's say, on a higher time frame perspective. Okay, but then you get these areas right in here. You get these areas. Um, let's go this one, and this one. Right. So we see that you know, this is uptrend, and this could be downtrend on a higher time frame perspective, right? Overall, but then in the grand scheme of things, or in a sorry, in a smaller scheme of things, we we get these retracements of price that can confuse newer traders in thinking that you know, downtrends are presenting themselves, or uptrends are presenting themselves in you know, overall for them, because they blind themselves by not looking at higher time frame perspectives. So they get caught up in these retracements in the higher time frame uh, trend, or higher time frame bias, and so on, you know. So let me finish. You know what I'm saying? Like we're in a downtrend here, but it can confuse you. It can confuse you when you go to lower time frames. A lot of people say there's a lot of noise on lower time frames. I don't really think that that's the case. I think that the lower time frames have a lot of valuable information, but also, your overall analysis and your overall bias of the market should not be coming from smaller time frames, because you can get caught in these retracements right here when really, this retracement is creating a new low to create a new high. The retracement to create a new low to create a new high, right? And then a low retracement to create a high, right? And then there wasn't a new high, right? This high right here didn't get broken. So we traded down and created a new low. Retracement, lower high, and then a new low. Okay? So I hope that you know you were able to understand a little bit of this. I hope maybe something clicked for some of you newer traders that that do have trouble detecting trend and finding which direction to really look for positions to get into the market. So um, one thing I used to have trouble with too was that exact thing. When you go to a pair, when you go to a currency pair, and you're just looking, and the market's kind of like, either going like this, sideways. I really learned to not mess with the pair like that. But from that from that sideways um from that sideways consolidation, I realized that, most of the time, if the market trades up and breaks these highs here, I know that either the market can continue, being bullish, and vice versa. If the market, trades down like this, I know that, and breaks these lows and creates a new low, I know that we could potentially continue to have a bearish market. So yeah, key things for this was, um, the market moves in three ways, which is uptrend, consolidation, and downtrend. And the consistency, I mean um, what it what it's what a uptrend consists of is, a sequence of higher highs, higher lows, higher high, higher low, higher high. And what a downtrend would consist of, what you can identify when you are look for a downtrend, is lower lows, lower highs, lower lows, lower highs, and so on. So yeah, I hope this video helped a little bit. I hope it clicked for some beginners, and hope you all have an amazing day, and I will see you guys next time. Peace out.